Taher Badshah, Head Equities Mutual Fund Motilal Oswal AMC is now joining us. Taher, good morning. As far as markets are concerned, there just seems to be no correction. There was a 2-day correction, and now in the last 2-3 days, we've actually regained more than about 50% of the losses.
Yeah, I think clearly things are in the right direction as far as the overall economy goes. So it's very hard to expect a significant correction in the markets. But we are as we keep climbing up, we also get into a situation where clearly valuations, even on a forward basis, start looking getting more and more challenging. And therefore earnings start lagging behind by some margin. So we have to, there will always be a requirement for earnings to catch up before markets can continue to trend higher like this. So I think overall the macro situation looks promising. Overall, we are continuing to probably follow the footprints of the global markets in the very near term, given that there are lack of triggers as far as the domestic market goes. So I think that's going to be the norm for the day. But as we rise higher, we all will get even more and more confronted with the challenge of having earnings to follow. And if that falls short of expectations or some such, then we could probably see a correction in the markets.
We saw a correction on last Friday and Monday because of what's happening with global markets. Some of the global bonds really yield spiking. Do you think the recovery that we are seeing now suggests that a lot of money is waiting on the sidelines? So the next 2 or 3 corrections may also be bought into, if there is any?
Yeah, the flow situation has been fairly robust, at least from the foreign investors' side, and that probably will always bounce back as soon as we get indications that the Fed is going to hold back for a while, or even the other economies are going to hold any kind of interest rate hikes, or maybe continue with quantitative easing, in fact, on the other side. So I think a flow situation will dictate the course of the markets in the very short run, and we could see a good resumption of flows if let's say the coming week passes by without any disruption as far as interest rates go in the global system.
As far as Fed interest rates are concerned, is that really an overhyped event by the markets?
Well, I mean, the market, the interest rate levels in the US are such that there is clearly very low downside, or very less amount of room for rates to head any lower. So obviously, any kind of directional move upwards will be taken with a little bit of skepticism, because it begins the trend of increasing interest rates in the US, and that obviously is implications for not just global interest rates and interest rates across emerging markets like India, but also has significant implications for flows and the currencies as well. So I don't think it is a overhyped event. It is an important event as such, but closer to the date of any kind of decision, we will always see volatility to be higher. So now we have to bear that volatility, and I think that is where we are, in the throes of that volatility in the very short run. Hopefully we will get over it post next week.
Last time around in 2009, 2010, we continuously saw selling pressure coming in from mutual funds, or redemptions were pretty high. Is that the difference this time? That markets have seen almost a big correction in Jan and Feb, but mutual fund flows never stopped. In fact, we have again started to see mutual fund flows pick up despite the sort of returns that we have given on a yearly basis. So that's the big difference.
Yeah, I think you're right, and as far as domestic mutual fund inflows go, I think quite a lot is influenced by the overall levels of the market.